I'm Chris Preston.
I'm Brett Simmerman.
Welcome to Street Check, the best two-person podcast in the history of Cabot Network. It's the first time it's been the two of us in a while, and it's going to be the only time. You got some big travel plans coming up. Um, Not the only time in a month stretch, I guess.
Yeah,
Um, Lots to talk about today, but first I got to start with happy almost birthday, Brad.
thank you.
Tomorrow, I believe. I was going to have Madison sing you happy birthday and bake you a fake cake, but she refused. Uh, just kidding. Um, how old are you tomorrow?
42.
Oh, wow. Got your whole life ahead of you. Um,
I'm about two-thirds of the way through. We'll see, though.
yeah. Two-thirds. Wow. Um, you really are a pessimist. But you also are just coming back from, you had a fascinating trip last week driving a bunch of teenagers to Disney to perform, a
Okay.
Disneyland to perform. Tell us about that.
I will. I do want to start with a question. Do you think that I am a bus driver? Do you?
I thought you'd said that you were driving that bus. Yes, I thought you were.
Okay.
Did
All
we
right. I
say that
wanted.
on the podcast last
You
week?
did. You speculated about that on the podcast last week. I am not a licensed bus driver. I was one of like eight chaperones. We chartered a bus. We went to
See, I didn't
Disney.
think it was a whole bus. I thought it was just like a van. I
No,
thought it was
no,
like 15 kids or something. Or well, maybe that would have been too many.
there
10
were
kids or something.
40 kids for my daughter's choir. That's why we do the stadium work and I sling hot dogs during spring training,
Right.
raise money for this trip. It's a, expensive trip, so the
Yeah.
fundraising is high intensity,
I
mostly
was picturing
good.
Chris Farley driving the bus and Billy Madison getting, red faced and upset with all the kids in the back. But yeah.
No, I was just sitting in back by the broken toilet with the AC blasting on me and couldn't sleep. So I am not did not drive the bus. I was just a passenger. Good trip. Kids enjoyed it. I got soaked by the new Splash Mountain at like 10 p.m., which was not fun for the rest of the night. Performance went off pretty well. Not perfect, but it was by all accounts one of their better run trips, and run it back next year. I've
Nice.
already been volunteered to volunteer again,
Oh,
which
great.
is heartwarming. It means my daughter wants to spend time with me.
Yeah, that's a good thing, especially for a teenage daughter.
Yeah.
And now you're next week you're off again. You're headed to what, London, Athens, where else?
Yeah, you are going to be flying solo or solo with guests for the next 2 weeks on the
Yeah.
pod. I am in London for 3.5 days, and then we're on Crete for 5 days, and then we're in Athens for 3 days, and we'll do Hanya and Heraklion and see all the archaeological sites, see the Acropolis, and go to the Oracle at Delphi and all that stuff. I'm excited for London. I like big cities
Yeah.
as a rule, I think. I have discovered. So it'd be fun. A lot of work leading up to it, and with it coming right on the heels of the other trip, it's like I feel like mentally I haven't had time to fully prepare for like another trip right after the first one, but we're looking forward to it. It should be a blast.
Yeah. Athens I've been to and it's great. Acropolis is pretty amazing. But I haven't been to London, so sounds like a great trip. Yeah, so I'll have some guests on the next couple of weeks. Mike and Jacob did a good job filling in last week. Of course, the week before I was gone, Tyler filled in for me. So we have a lot to get to since it's been a while, since the two of us have been on here. So tell people what we're going to talk about today.
All right, today we will discuss news this morning that tariffs are back, baby. We are also going to talk about higher yields on fixed income. We are going to talk about the Moody's downgrade. That was the last of the major ratings agencies to downgrade U.S. debt. Tesla and Bitcoin are both roaring back. Bitcoin hitting all-time highs, Tesla up like 30% in a month. And then we are going to talk about Ryan Reynolds' IPO.
Yeah, but no one saw that coming. But first, before that, as always, we have a take that we'd like to defend. And today you're up, Brad, and your take, for which you have 90 seconds to defend, is that margin balances are flashing a warning for stocks. Go.
All right. So I have talked a lot about liquidity in general, right? Just like tons of money floating around and how it needs to go somewhere. And that because of that, you can find bull markets even when the headlines are really bad. I mean, we were coming into today within like 5% of the all-time highs, despite the pending tariff regime and the existing tariffs that are now in effect. Um, and it's not that the market doesn't care about bad news, it's that it has a ton of money to send somewhere. So I was looking for extensions of liquidity as sort of a measure of market health and came across an interesting analysis um, that found that margin balances, so the aggregate margin balance, which FINRA publishes on a monthly basis, when it falls below its 12-month moving average, that tends to precede either corrections or consolidation in the broader markets. And with the report of April's figures, which was just in the last week or so, the aggregate margin balance in the U.S. is 0.85 trillion or $850 billion, which fell just below its rolling 12-month average. It was as high as 937 billion back in January, and it's sort of a measure of forced sales, risk coming off the market. It's not a great timer. You can't just look at the figure and say, okay, well, this is now when it's definitely going to come down. But when it crosses below its 12-month moving average, which is around 852 billion as of right now, so which it just did, leads to corrections, leads to consolidations. Financialcrisis.com, Brexit, uh, COVID, those were all events that happened around the same time.
So when was the last time it dipped this low? Sorry, just to
So the last time it fell below its 12-month moving average was COVID.
was COVID. Okay.
And before that, it was around some central bank policy that saw consolidation in between 2018 and 2020. Before that was Brexit. Um, there was a little bit of a blip around like 2012, but then before that, it was a great financial crisis. So that systemic sort of reduction in outstanding margin balance captures a whole lot of sentiment and also captures forced selling, and it sucks some liquidity out of the market. That's not saying that we're going to retest lows necessarily, although I could see it happening. But it should serve as a warning sign to investors that it's not going to be smooth sailing to 6,500 on the S&P. We are probably at the very least facing consolidation. We may be capped out for the year already. I mean, like that wouldn't surprise me, but just sort of be aware that the underlying conditions in the market are not as super supportive as they have been up until really just like a couple of weeks ago, just based on that margin metric.
Yeah, I had Mike and Jacob on last week, and they're both cautiously optimistic and saying, the evidence is improved, all that. But they also expected that there would. I asked them to do the thing that they hate, make predictions,
Yeah.
and they both said that they expect some turbulence coming. This is before some of the items we're going to get to. They expected some turbulence coming up, and this sort of this margin balances flashing a warning sign sort of adds to that. Let's get into some of the things that the market hasn't liked this week because last week stocks were riding relatively high. I think we're back slightly positive territory in the S&P for the year, and huge recovery from the post-Liberation Day lows in early April. Then this week, a number of items have thrown a wrench into that rally. Not starting with, but the latest of which is tariffs are back. As of this morning, Trump is threatening 50% tariffs on EU because there's no deal imminent there, or according to him. I think he's threatening to institute those as early as Monday. Is that right? I don't know. It's hard to know all these things.
I,
Um, and then also threatening Apple with tariffs um, for making their products overseas. I can't remember what was the number he threatened on that.
25% if they don't make them in the US with I don't know if he specified US parts. It's not dissimilar from what he said about Walmart,
Hmm.
where it's like, hey, Walmart, you need to eat these tariffs. Okay, well, no, we're just we'll do what makes business sense and we'll pass along what we can and we'll stay price competitive.
Yeah.
I mean, it fundamentally misunderstands how tariffs work. It's
Yep.
this ruling by fiat or ruling by decree thing. I mean, the reality, I think the reality of it is China showed other countries how to address it. Like,
Hmm.
Starmer in the UK came out and announced a deal that was slightly worse from them than the status quo, but not terrible. We'll see if that holds. China didn't do anything, and you know, Trump was obviously President Trump and the administration were obviously scrambling to make some kind of deal. China, bigger trading partner. We need them for more materials and inputs and stuff like that. So it's not exactly a one-to-one, but I do think that a lot of these countries are going to feel less impetus to go out and make deals when the result of making a deal is bad for you. The result of not making a deal is you show your citizens or your investors that you're standing firm on your policies, and then you still make a deal. You still get a
Yep.
deal that's probably pretty comparable to what you would have gotten anyway if you bent the knee. Um, it's frustrating. I don't.
Yeah, the market doesn't like it. Anytime tariffs come back into the news, market's down. I think we're in a better place. The market is in a more resilient, less fear-driven place than it was certainly 6 weeks ago. This double whammy probably would have sent stocks tumbling 2, 3 more percent. And as of right now, at least as of this recording, S&P is down 0.8%, Nasdaq 1%. Um, it's not good, but I think the market knows now to expect what you just said, that this doesn't this is a tariff warning. It is not institution of tariffs. And as of this moment, there are no real tariffs out there. Everything's on pause.
Well,
So,
there's the 10% like baseline tariffs. Those are still in effect. China
right, but I
has,
mean the thing that the high
yeah,
totals, that were sending shivers down the market spine on Liberation Day. Yeah.
yeah. I don't know. Like the announcement I think showed where how much pain, at least perception wise, the president was willing to accept for the imposition of tariffs, and he seems unwilling to, uh, you know, steer a plane into the mountain, but he is content to cause turbulence.
Hmm.
So I think that's sort of where the market has settled out. I wouldn't expect a repeat. I can't imagine any tariff news until at least July at the end of that 90-day period,
Yeah.
causing the same kind of pain and consternation that we were seeing in April. And even that, like if it breaks down, I don't think that we see like multiple 4 or 5% like sell-off days where it's just panic selling. It's probably grind lower
Yeah.
unless the end of the trade negotiations are, well, now China's getting 300% tariffs, right? Unless it turns into an escalation, I can't imagine it getting back to the same kind of sentiment levels that we saw earlier this year.
Right. Yeah, I agree. Yeah, that's why a few weeks ago I'd said buy in May. Now this week hasn't been great for that theory, but overall May has been a much better month for the market. And part of that was buy in May because once we get to back half of June, early July, if a lot of those, it was we get close to the end of the 90-day pause on most countries. That's when, like you said, some probably not the same fear that we saw, but turbulence will come back into the market. And, this may just be a speed bump this week, driven by a lot of bad headlines. Let's get to the next one. Yields are back in the news. Also, they're up above right around 4.5%. I've said that's the 10-year Treasury yield, 4.52 as of this moment. 4.5%. I've sort of singled out as that's sort of like the line of demarcation. Anything below that, usually the market's fine. Above that, people get antsy. Got up to about 4.6 a couple days ago. Um, that's the first time. This is the first time it's been above 4.5 really since February. And that is when, it's no coincidence that, the market top came in what, mid-February, and then
19th.
19th, and that's right around the time the yields spiked to they got to 4.6, 4.7%, and stocks plummeted. So if these keep grinding higher, that's not going to be good for stocks. This probably matters more than the tariff threats at this point, because this has been an existential, not crisis, but existential threat for, last few years while rates have been high. Um, Fed hasn't cut rates at all this year, and yields as a result have sort of just been hanging around, and now they're spiking higher, and market doesn't like that.
Yeah, the 30 years up over 5%.
Yep.
It makes mortgages more expensive. Higher yields in general make everything more expensive. They also offer a competing investment alternative to equities, so there's a little bit of pressure from both sides on stocks specifically. Interestingly, it's not just a US phenomenon. We were sort of seeing that with the trade war stuff where the it was sell America, right? Like you get out, you dump treasuries, you dump the US dollar. Japanese bonds, 30 years just hit all-time highs at 3.185%, 40 years at 3.635. The risk there is the Japanese carry trade again. Like
Yeah.
it feels like it was 10 years ago, given all the headlines we've seen.
Within the
But
last year.
yeah, yeah, if borrowing gets more expensive in Japan, you can't essentially borrow for free and then invest in the US. That is sort of flashing yellow lights. I don't have like a comprehensive explanation, but it very much feels like the world is looking ahead at a period of what will probably be slower growth, less ability to borrow money, because the trade war and the tariffs, it all sort of gums up what was a high performance race car, right? Like if you're driving like an alcohol fueled funny car and you're doing a quarter mile in like 4 seconds or whatever it is, right? Like something that's just this finely tuned machine where it has to work flawlessly. That's essentially what what the global economy was until we'll say COVID. Pre-COVID, that's essentially what we were operating.
Yeah.
Any deviation from like the operating parameters and it goes into a wall, you just don't have a lot of tolerance. If you're in a 57 Chevy and you're losing a quart of oil a day, you can still get to A to B, but you won't do it nearly as quickly, right? There's like you sacrifice resiliency in exchange for speed. And my concern is that we are seeing a little bit of a re-rate as far as what expectations for growth look like globally. If
Mhm.
everything is just growing slower, it probably caps the returns people can expect with equities. It's going to require higher rates everywhere, and we would expect to see things to break incrementally as we sort of reach what is maybe more of a new normal. So I don't think we get an exact repeat of the carry trade meltdown from before, but we probably see some unwinding. Um, there's too many moving pieces to make any kind of like confident prediction, and I would be a fool to do so. But
Yeah.
I do think that the big picture sort of takeaway is that the world is probably getting accustomed to or beginning to expect a period of slower growth.
Yeah. Um, I think that was it was probably headed that way anyway, but now with all the tariff stuff, who knows what happens with the tariff stuff. But yeah, I think it's become, as a result, it's become more of a, you know, let's go growth market, and more of a stock pickers market. And like you said, there's always a bull market somewhere. And in fact, the bull market in the S&P is still intact. Um, but some of these things are slowing the momentum that we saw over the last month or so. Speaking of which, the next item is Moody's downgrade. Not to just pile on all the bad news items, but a lot has happened this week. And one of them is Moody's downgraded U.S. Credit. What is it from A? I can't remember what the it's like
AAA to AA1.
AA1. Okay. And that that came before yield spike and before the latest tariff threat, and the market kind of shrugged that off, which is interesting. So did U.S. banks really. Um, so it just makes me wonder, I don't, how much that matters, and compared to all this other stuff, you know, high yields, tariffs, recession fears. I guess some of that's why Moody's downgraded. Just, I think it's cited, um, political turmoil as one of the reasons that it downgraded um, U.S. sovereign debt. But I don't know that it alone, and we saw it from the market. I don't know that it alone matters. It was more, you talked about margin balance as being a warning shot. This may have been sort of a warning of what was to come with the market the rest of the week, but it on its own didn't send stocks tumbling, really.
I will say this. Moody's downgrading U.S. Treasury, the credit rating on it, I think from a practical standpoint has exactly the same impact as you and I on this podcast saying that we're downgrading U.S. Treasury debt.
Right.
The market doesn't care.
Right.
The S&P already downgraded it in 2011. Fitch downgraded in 2023, but uh, Moody's opinion, right? It's still Treasury debt. It is backed by the full faith and credit of the U.S. government, which is the biggest economy in the world, the safest. It's the reserve currency. It's backed by taxing authority of the government. Like you can have whatever opinion you want about Treasury debt, and as long as the things that make it safe remain true, then the opinion doesn't matter. I think the more I consider it, the more I think that it's effectively meaningless. I think
Yeah.
bonds and the market pretty much responded that way. It's
The
just
fact that Fitch downgraded 2 years ago and I have no memory of that or its impact on the market says a lot. You know,
I, I
did
think
we even talk
Fitch
about that? I don't even know if we talked about that.
probably
Uh,
not.
yeah.
Uh, I mean, Fitch is sort of the redheaded stepchild of the three ratings agencies.
Yeah.
Moody's, I think I would say Moody, in my personal esteem, I would consider Moody's to be the premier rating agency, but it doesn't. It's just it's an analyst opinion on U.S. debt. Like the big beautiful bill is bad from a tax revenue generating standpoint and from a debt management standpoint, and it very much feels like Moody's just wanted to get their opinion out there on that
Yeah.
front. The
Yeah.
the problem with this stuff, we've been kicking this can down the road for 16 years.
Mhm.
Uh Longer. I mean, 17 years at this point, right? Like we were what 3 trillion in debt in like '05. I don't know exactly what the figure is. I could look it up. Maybe I'll do that in a later segment, but um this has been an ongoing issue. Japan coming out and saying that their financial condition is worse than Greece should have terrified the market more than it did. I don't know if anybody that's watching or listening to this remembers the Greek debt crisis, um, the amount of attention that got, and as disruptive as that was, at least in spurts to the stock market was pretty extreme. But that was against the backdrop of like the global financial crisis. Uh, it's
National
not
debt,
great
by
out
the way,
there.
is 36, almost 37 trillion right now. If
Do you
that's what you're.
know? Do you know what it was in like '05?
Uh, I'll look. You keep
All right.
vamping. I'll look. Yeah.
Uh, okay, '05 it was 8 trillion. So turn of the
Adrian.
century, it was probably around 900 billion or 3 trillion. The thing is,
There wasn't it? There was a surplus after Clinton, wasn't there?
there was no deficit, but we were still operating with net debt.
Okay.
But what everybody has done, every politician, all the parties have done is just kick the can down the street, raise the debt ceiling, kick the can down the street, raise the debt ceiling. And that's the MO. It doesn't matter until it does. Like
Right.
who's uh, what's the catalyst? What's the thing that makes a bond market say, well, this is unacceptable. We can't buy treasuries anymore. Um, I don't I don't know that there is a thing short of default. Like if President Trump comes out and says, we're going to declare bankruptcy as the US to get a head start on our recovery, and we're going to pay 80 cents on the dollar for all these outstanding T-bills, or we're going to offer dollar for dollar and 100-year T-bills that are partially backed by gold, Bitcoin, and the credit of the US. Like that's a catastrophe. It essentially breaks the global financial system, and that would do it. But
Yeah.
anything short of that, I don't know what it is. And I don't know that anybody can point to the thing that says, now's the time that you need. We've never really worried about the debt ceiling, but now's the time to actually be worried about it and to
Right.
start changing how you invest accordingly.
Right. It feels a lot like how my kids see, like anytime I say like don't do that, or
Yeah.
they know that my threats are empty or ultimately empty.
Yeah. Or
So they just keep doing the thing.
if your bank sent you a warning, it said, "Hey, your $30,000 credit card, you've got 18,000 outstanding, or you've got 29,000 outstanding on it. We're going to raise your credit limit, but be aware."
Don't
And
do
then
it
you keep
again.
doing that time
Yeah.
and time again, and they just keep like,
Yeah.
"Hey, it's 45 now. We're going to raise your credit limit, but just
Yeah.
be like it's not a meaning. There's no meaningful lesson that you can send short of it, like people just losing faith entirely.
Right.
Um, but if we are hitting a period of slower growth, it's not going to be. I think if that's the case, I think the sell America trade is sort of has to be over. I if we've got a global economic slowdown, I'm less worried about the U.S. barring something like a default.
Right. Okay, that's enough depressing macro talk for today. Before we get to our next slightly more fun topics, just wanted to say that anyone listening today, we have a special offer at cabotwealth.com/street. We're having a Memorial Day sale. That's Cabot Prime Core, which is uh, nine different investment advisories valued at over $6,000, but we're giving people $500 off the normal price today. And that is a 30-day, 100% money back guarantee. And this offer goes through basically Memorial Day, the 26th at midnight. So if you go now, you'll save $500 off the normal price of Cabot Prime Core at cabotwealth.com/street. And again, you get nine investment advisories, including Cabot Growth Investor, Cabot Early Opportunities, Cabot Dividend Investor. Sorry, that's income for income investors. You get Cabot Money Club, Cabot Retirement Club, Cabot Top 10 Trader, lots of good stuff. And you get all kinds of special reports and things too.
What
Sorry.
what is the normal annual price? You've offered the value. What's the normal annual price from which way?
Um, the normal annual price is 1997. It is today going for 1497. That's 1 year.
Thank you.
1 year. 2 years, it's 39. You can get a 2 year plan. That's 39.94. So you get $1,000 off of that, 29.94. So you could do 1 or 2 years, say $500 or $1,000. But yes, valued at 6,000, over $6,000 you did individually. So pretty good deal, and an even better deal if you go to that link, and we'll include the link in our write-up on the YouTube page, cabotwealth.com/street. Okay. Next up, so we talked about all this sort of, doom and gloom in the market, and yet risk, it's still a risk on environment, and we're seeing that in two ways, more than two ways, but two ways sort of stand out in particular. Bitcoin hit all-time highs. I think I called that one a month or so ago. I, probably helping that President Trump had a meeting at his country club with a lot of, crypto bros yesterday. Um, yeah, maybe that's not moving the needle much, but just assuring them he's sort of got their back there. Um, but that's more just a pure risk on asset, bull market asset, as we've discussed many times. Then the other, Tesla, has bounced back with a vengeance in the last month. Yeah. I've mentioned that I have Tesla in my stock of the week advisory. It's been in there since, well, first Mike Santola recommended it in Cabot Top 10 Trader in late 2011, and then my predecessor Tim Lutz, former Cabot chief, had it in there, or first recommended in December 2011, and it's still in there, and it's up 17, 18,000%, something like that. It's the best stock in the history of Cabot. And what my point was, even after it looked pretty grim a month and a half ago, and terrible quarter for Tesla, its worst quarter in maybe ever in terms of sales growth. And was coming off of all this negative press of surrounding Elon Musk's involvement in Doge and people selling their Teslas, et cetera, et cetera. My point was, Tesla's been counted out so many times. It has nine lives and keeps coming back. And sure enough, it's come roaring back up. I think you said 30% in the last month. You made an interesting point that I want you to expand on, that Tesla is almost like a leveraged, maybe fund is the wrong word, but acting like a leveraged index fund right now. Explain that.
So Tesla is like my criticism for Tesla, I think are pretty well covered. They're a car company that makes money selling carbon offset credits. That is at risk of losing essentially any money from like green initiatives with the new bills that are coming out, losing EV credits, whose sales are declining. There's one analyst out there that has a price target on Tesla at like $26 a share, which is what it would be trading at if it was valued like a car company. Um,
It'll never get there. Just that analyst, he'll keep, that's like saying,
I don't know.
yeah,
I mean, it's a trading at 193 times trailing earnings right now.
yeah,
Um, it trades with a beta of 2.43. It is it's just a risk asset. Um, the fundamentals, like you said, it had one of its worst quarters ever, possibly its worst in history. Um, the competitors, BYD, right? Even XPeng and
love
some of the
BYD.
other. Yeah, you love BYD.
I love
They're
BYD.
they are eating Tesla's lunch in China.
Yep.
They will be eating Tesla's lunch in South America, Africa, presumably, because they can come in with lower cost EVs. But Tesla keeps chugging along. There's no there's whatever you think about the fundamental value for Tesla, there is a distinct disconnect between what the market value is and what reasonably you could expect it to return to investors as like if you're a fundamental investor, if you're looking at like how is the business if I buy a share for $243 or I'm sorry, $343 or whatever it's trading at right now, how is the company going to return that dollar amount to me? But I guess it could pay me a buck 60 a year in earnings over the next 200 years, but it doesn't trade. It's not trading on those fundamentals. It is just an analog for risk in the market in a way that honestly Bitcoin sort of is, right? There is a
Yeah.
complete disconnect between what the actual value of Bitcoin is and what it's doing, and it's just a risk measure. Tesla, they announced their Austin robotaxi, but what differentiates that promise from Optimus robots or boring tunnels or any of the other promises they've made? Bitcoin is now getting bought by some states. New Hampshire approved Bitcoin reserves after the federal government did. Texas just voted on it. I think approved it a couple of days ago. Okay, it's just it is, deep pocketed states, investors, et cetera, just piling into a risk asset without any consideration for what it's capable of actually returning from a business standpoint. So I would not short Tesla. I would.
No.
It feels like you're stepping in front of a train.
Right.
It-
I mean, to your point about the volatility, its chart over the last year looks like a Bitcoin chart. Um, It's up 94% in the last year. It may not feel like that, but a year ago at this time, if we'd been sitting, right here on May 23rd last year, it was trading at 173 a share. It made it as high after, it had this explosion after not only Trump won the election, but then, quickly added Elon to his cabinet, got up as high as 479 by late mid-December. And then it tumbled all the way this year to $222 by second week of March. And now it's back up to 337. Like I said, up, I think it's up 35% in the last month. It's all over the place, hence the, 2.4 beta. It really does just look like just ride. It's along for the ride, in the most exaggerated sense possible of which way the market winds are blowing.
Yeah, and it makes it tough for investors.
Yeah.
I continue to think that if you own it, you let it run.
Yeah.
Um,
If you think the market is going to be up in the next
two
year, couple
years.
years,
Yeah.
Tesla probably will be up even more, the way that it's going.
Yeah, it's not like all the bad sales numbers, the like all-time low sales in Germany or whatever that just came out. Uh, the stock just comes out that glances off the stock because that's not how investors are buying it or how
Right.
traders are buying it. Maybe it's even wrong to say investors. It's a momentum vehicle exclusively. Um, and it's got a high profile CEO who's got his fingers in a lot of pies, obviously SpaceX, but all of SpaceX's volume is Starlink. Um, but there's always going to be like the new thing and like the next big initiative, the next big project. There's AI, there's Grok, there's always going to be that thing. Um, I don't know. I can't think of any stock that I've ever seen that's anything that's quite like it,
Yeah.
where it is whatever you want it to be in a way that I think is sort of similar to the president's appeal, in that whatever it is that you want to project onto the company, or that's what's offered. So if I'm saying, well, it's a car company, it's like, oh, well, look, they've got all these car announcements. They've got self-drive. They've got robo taxis coming out. If I think it's a space company, it's, hey, SpaceX, all these launches. They are the biggest launcher on the planet by a long shot. They put a ton of mass into orbit. Um, if I think it's an AI company, they have this like Google, I guess, would be maybe the closest that I can think of where it has been sort of an everything company, or maybe Apple to some degree, especially when they were talking about rolling out their EV. Um, which is a long-winded way of me saying like I can't endorse it, but don't bet against it.
Right. Yeah. That's why I've got it as a hold in my portfolio. I much prefer BYD because I think it says way more upside. It's a car company that's eating Tesla's lunch in China and starting to, I think they sell more EVs now than Tesla globally. I'm pretty sure that's right.
Yes.
And that's with doing 90% of its business in China. They're just now expanding globally. So I really like it has some China baggage, of course, there, which had held the stock price down for years, but it seems like it's shaking that now and is now at all-time highs. And I think there's way more upside left. But yeah, you're right. I wouldn't short Tesla either. I think if you believe in the market the next couple of years, I think you should probably also believe in Tesla. Um, so
Yeah. And
yeah, and it shows that despite all the things we said for the first half hour here, that risk is still in play with Tesla running up this high. Mag 7 did well until this week. Um, and Bitcoin at all-time highs, or at least until the last few days.
yeah, it's like I don't know, I guess Tesla, thinking of it like a baseball analogy, is like Big Poppy towards the end of
Oh, you're
his
speaking my
his
language.
careers
Yep.
career where it's like, yeah, he might strike out a couple of times, or he might drive the ball into the parking lot and
Hmm.
clear the bases. right? Like all my negativity of Tesla should not take away the fact that that company single-handedly popularized EVs in the US, maybe globally. And like
Hmm.
obviously there was a lot of stuff going on under the surface. The commercialization of space, like they are taking moonshots, and that seems to be all they're taking. They are only swinging for the fences, and it works. And when it works in a way that is almost unimaginable. And when it fails, it's a strikeout. It flames out. So
Right.
like I have to give Tesla its due for hitting on those moonshots, but um, I mean, I guess the thing is like, okay, you can't predict those. You can't count on a home run every time.
Right.
Like not in your retirement portfolio. Is your if you're if in your retirement portfolio, if you could like bet on home run, or you're not going to bet on a home run every single time. You're going to want a guy that occasionally hits singles and doubles.
Right.
Um,
Yeah.
but you know that's a little bit of a like a mea culpa. Like, hey, I have to give Tesla credit for the things that they have absolutely done right.
Yeah.
If I while I'm bagging on them.
When it was after its terrible quarter, when it was, down to 220 a share, and was down for like 40% for the year, maybe more than that. I have to admit, I was saying, yeah, you got to hang on to Tesla. It comes roaring back. Sorry, I got to 221 beginning of April. Um, I I was saying you got to hold on to it. It comes roaring back without even maybe 100% believing in it. I think I even doubted for a while, but now I can pat myself on the back and say, "Oh, I knew all along."
Well,
Uh,
17,000% buys a lot of goodwill. I mean,
True,
like,
true. Yeah, it does. Yeah. So anyway, speaking of risk remaining in the market, IPO market has picked up, including one yesterday. That is, if you read the
I
headlines, it's
forgot we had another entry in the list. I'm like,
yeah.
all right, it sounds like we're done. All right, go
If
ahead.
if
Sorry.
you uh, if you read the news, you would just think this was purely Ryan Reynolds' IPO. It's called a company called MNTN. Ryan Reynolds, of course, the actor of Deadpool and what else fame? He's done so many things. Free Guy or whatever. I never saw Free Guy.
What
Uh,
what's his movie with Sandra
and Wild
Bullock?
way back in the day. What's that?
What was his movie with Sandra Bullock?
The
The
proposal,
The
Thank you,
the
Madison.
there. That's
best
why
The
I have it
movie
on.
proposal.
ever. So
Yeah.
funny.
It is great. The proposal is super cute. You
He's
wouldn't expect that from me.
ubiquitous. He has a very high popularity rating, so they're cashing in on that. He is the chief creative officer. This is after a buyout a couple years ago of MNTN. Um, he, let's see, he became the chief creative officer after the platform acquired his agency Maximum Effort in 2021. Has remained in that role, and they're cashing in on his name. They went public yesterday. They're up 60% from their IPO price. They're still up. The stock's still up today. And it's a streaming ad service. Never heard of it. Um, let's see, went public at $16 a share. It is now, as of this minute, at almost $29 a share. We've talked a lot about how we don't really recommend investing in IPOs like right away, even if Ryan Reynolds' name is on it. But the IPO market is picking up, and that in itself sort of shows that risk is sort of back on a little bit. So through the first not even fully 5 months of the year, there's been 80 IPOs. That's up from 58 the first 5 months last year. Um, and this is sort of the latest evidence. I don't know where you want to go with this, other than to say uh, this was the first. I can't remember another IPO that's just based almost purely on an actor's good name, but here we are.
Like, I don't know. I jokingly said in our call before this that Ryan Reynolds is the next Warren Buffett. Um, he had Mint Mobile that he sold to T-Mobile for 1.3 billion back in 2023. He owned about 25% of the company at the time. I think he probably sold his aviation gin brand. I don't know for sure on that one. Um, I was looking at this. They place ads for small businesses in streaming services, and my initial reaction is, okay, well, why can't Google for YouTube, or why can't Netflix sales department handle this? But the more I think about it, I wonder if there is maybe something to of like a Mint Mobile model where it's like, hey, we're gonna aggregate all these sort of lower priced buyers into a big group, and then we're gonna take advantage of a market inefficiency. So what's gonna happen is MNTN is gonna buy 50, 60-second blocks on Amazon Prime. And then they're going to portion that out to all these small companies that are paying them, right? Where they're effectively acting as an ads aggregator for small businesses. If that's their game plan, if that's how they operate, I like that a lot.
Yeah.
I think it definitely serves a market need. I mean, like maybe there's a Ryan Reynolds premium for the stock right now,
Yeah.
but this is one that like, oh yeah, the business model makes sense. I understand how it could be profitable for them. It probably serves a need, right? Like I can't compete with as a business owner, I can't compete with Procter and Gamble and just go to Amazon and say, "Hey, show me on Prime." But if enough guys like me go to Ryan Reynolds and say, "Hey, Ryan, go tell Amazon to show us on Prime and buy out these ad blocks for us."
Yeah.
Yeah, that makes sense. I think it's a great idea. I think it definitely belongs on the watch list. I didn't
Yeah,
think
I
I'd
would
be
give it
saying
some
that.
time. Yeah,
Yeah.
it's we're 2 days in. I'd give it some time. There will be a pullback at some point, maybe even starting next week. But yeah, it's worth keeping an eye on for sure. But yeah, sort of I guess this is a tale of two halves. This podcast is we talked about all the doom and gloom the first half, but then you know the last couple of things we've talked about is Tesla big bounce back, Bitcoin all-time highs, and Ryan Reynolds has an IPO, and the IPO market is picking up. It shows that it's sort of a split market where risk is still on, and it's still a bull market, but there are sort of dark clouds forming. We thought they'd gone away, but um, it's kind of like Brad. It has rained all but 5 days here in Vermont this month in May. I think we had a 5 day stretch of beautiful weather, and it's been 40s and 50s and raining every day since then. And it was like that every day before that, and it just feels like it's never going to get better. But eventually, I know that summer will arrive, the clouds will part, and that's kind of how you have to see the market when you know things like tariff threats and high yields and Moody's downgrades and all that stuff, margin balances. I mean, there's a lot right now, but you have to, think that things will get better. Be an optimist. That was Tim Lutz's
Yeah.
advice. Yeah, it pays to be an optimist. Brad, you might need to take that advice occasionally. Yeah, I mean, you're saying you're not going to live past 63. You said that. Uh, said
Yeah.
that.
I guess that's how the math pans out.
Yeah. So I guess we only have 21 years left of this podcast, unfortunately. Um,
I feel like something has gone wrong in our lives if we were doing a single podcast for 21 years. Or very, very right. Like if we
very
if we
right.
become the internet's what's our equivalency? The internet's Mad Money.
Yeah.
If you and I are standing up against like a big screen slamming a buy button
Yeah.
and people are talking about the inverse street check effect.
Right. You might have
And
Matthew Tuttle back on to
he's like,
to
yeah, we created the inverse street check ETF. And
yeah. Yeah. Speaking of which, I did I text you this? He was so Matthew Tuttle, who runs what is it, the inverse Kramer. He also has one
yes.
that trades with Kramer, right?
Yeah, he had a long Kramer and a short
Long
Kramer. They had I
the
think a
L
lot of
Jim and
fun.
F Jim.
S Jim.
S Jim. Okay.
Yeah, Sierra Jim.
He was sitting courtside at the Knicks Celtics game like a week ago. I almost texted you. I was trying to get a photo of him. I'm like 99% positive it was him. We may have to have him back on just to ask him if
I
that's
don't
him.
know if he would come back on.
If he's, my thought was if he's sitting courtside at a Knicks playoff game, he may have outgrown street check, but who
I
knows?
was surprised he came on when he did.
Yeah.
He reached out.
Well,
He's like, "Hey, I have a correction." I'm like, "Okay, we'll come on the podcast and talk about it."
okay.
All
Yeah.
right.
Yeah, well,
Sweet.
it wouldn't hurt to ask Madison
All,
get on that.
all the
Um,
dorky, all the dorky fund nerds like me were excited about it. Which I don't think was most of our audience, but I love talking to the guy. I thought that was great.
yeah. Oh, all right. We'll try and get it back on. But okay. Well, I think that's a podcast. Safe travels, Brad. Enjoy your European vacation. If European stocks crash while you're over there, I don't know who to blame. Well, maybe if the EU deal or tariff threat gets settled, then you can take credit for it.
I'm just excited that I'm going before the euro can like gets up to like $1.50.
Yeah.
So that has been sort of a saving grace. I was a little bit concerned about that in early April. Like, should I start hedging my vacation plans by buying some FXE or something? But thankfully it reversed course a little bit. But yeah, I don't know.
Yeah.
It'd be nice.
Well, enjoy. Happy birthday. And
I get
yeah, I'll be back here with some sort of guest. Maybe Matthew Tuttle. Probably not. Uh, next week. But thanks for joining us, and we'll talk to you next week.